Welcome back to Talk Tickers, ready to break down another earnings call.
Always. What we have on deck today?
Well, today we're diving deep into Micron Technology's Q2 2025 results, and it was a pretty eventful one for investors.
Oh, how so?
Their stock took a significant hit, closing down 8% on the day of the call. So yeah, definitely some things to unpack there.
Interesting. So let's get right to it then. What were the key takeaways from their report?
All right, first things first. Micron posted revenue of around $8.1 billion for the quarter. Now, on the surface, that looks pretty decent, a solid 38% jump compared to the same period last year.
Right, but I'm guessing that 8% stock drop signals there's more to the story, right?
Exactly. When you compare it to the previous quarter, that $8.1 billion actually represents an 8% dip. Not exactly what investors were hoping for.
I see. So a bit of a mixed bag then. Growth year over year, but a slowdown sequentially?
Precise. Now, let's break down their two primary revenue sources a bit further. Starting with DRAM, they brought in $6.1 billion, which makes up a whopping 76% of their total revenue.
Wow, that's a huge chunk. How did that segment perform year over year?
Pretty strong, actually. We're talking a 47% increase compared to Q2 of last year. So definitely a lot of momentum there.
Okay, but I have a feeling the sequential story for DRAM might be different given the overall revenue dip we talked about.
You're spot on. DRAM revenue actually declined by 4% compared to the last quarter.
Huh. So what was the driver behind that?
Well, it seems like the number of DRAM bits they shipped out decreased by a high single-digit percentage, and that wasn't fully compensated for by the mid-single-digit percentage price increases they were able to implement.
So basically they sold a bit less DRAM, even though prices went up a little. All right, that makes sense. What about their NAND flash memory business? How did that perform?
NAND came in at $1.9 billion in revenue, accounting for the remaining 23% of their total. Year over year, that's an 18% increase, which is pretty decent growth as well.
But I bet the sequential story for NAND is where things get interesting, right?
You know it. We're talking a significant 17% drop in revenue quarter over quarter. And here's the kicker. While their NAND bit shipments actually increased slightly, prices tumbled. Like, seriously tumbled.
Oof, that's rough. How bad are we talking?
They mentioned a price decline in the high teens percentage range.
Yeah, that'll definitely put a dent in my numbers. Ouch. All right, let's move down the income statement. What about their gross profit margin?
Their gross margin came in at 37.9% for Q2. That's a decrease of 160 basis points or 1.6 percentage points compared to the previous quarter.
I see. So definitely some margin compression happening there. What were the main factors driving that?
They specifically pointed to those pricing pressures we were just talking about, particularly in the NAND market. They also mentioned a higher proportion of consumer-oriented NAND products in their sales mix, which tend to have lower margins.
Okay, so a combination of lower prices and a less favorable product mix, putting pressure on their profitability. Did they mention anything positive impacting their margins?
Yeah, they actually benefited from a more favorable mix within their DRAM product portfolio, which helped to partially offset those negative impacts.
So a bit of a silver lining there. What about their operating expenses for the quarter?
Operating expenses remained pretty flat, holding steady at $1 billion, no change from the previous quarter.
All right, so that's at least one less thing to worry about. What did their operating income and earnings per share look like?
Their operating income reached $2 billion for Q2, which translates to a 24.9% operating margin. Not too shabby.
Yeah, still pretty solid despite those margin pressures. What about their EPS?
Their non-GAAP diluted EPS came in at $1.56. Now, this is actually interesting because while that number beat their own guidance, it's still a step down from the $1.79 they reported in the prior quarter.
Okay, so a bit of a head scratcher for investors. Beating expectations, but still showing a sequential decline. All right, so we've got the high-level financials down. Let's dive deeper into the performance of their different business segments. I'm curious to see how each one contributed to this overall picture.
Absolutely, and that's where some of the more interesting details emerge. Starting with their Compute and Networking Business Unit, or CNBU as they call it, things are actually looking pretty good.
Oh, tell me more.
CNBU revenue grew by 4% sequentially, hitting a record high of $4.6 billion. And get this, CNBU now represents 57% of Micron's total revenue. Clearly a major growth engine for them.
Wow, that's impressive. What's driving that strong performance?
One word, HBM.
HBM.
High bandwidth memory. They saw a more than 50% sequential increase in HBM revenue, and that was a significant driver for the CNBU's overall growth.
So HBM's really starting to take off for them. What about their other business units? How do they fare?
Well, the Storage Business Unit, or SBU, had a bit of a rough quarter. Revenue declined by 20% sequentially, landing at $1.4 billion.
Ouch, that's a pretty steep drop. What happened there?
They pointed to two main factors. First, a slowdown in storage investments by data center customers. It seems like after a period of strong growth, data center spending on storage is taking a bit of a breather.
That makes sense. And the second factor?
You guessed it, those NAND pricing pressures we've been talking about, that's definitely impacting their storage business as well.
Right. So CNBU doing well thanks to HBM, but SBU facing headwinds from both demand and pricing. What about their mobile and embedded business units?
The mobile business unit, or MBU, also saw a significant decline. We're talking a 30% drop sequentially, with revenue coming in at $1.1 billion.
Wow, another big drop. What's going on there?
It seems like mobile phone manufacturers are continuing to adjust their inventory levels, which is putting downward pressure on demand for Micron's mobile memory products.
Okay, so inventory adjustments still working their way through the system. And what about the embedded business unit?
EBU revenue was down, but not as dramatically. They saw a modest 3% sequential decline, bringing in $1 billion.
Right, so a mixed bag overall for those other segments. Any color on what's driving that EBU decline?
Yeah, they attributed it primarily to inventory adjustments by their automotive customers, so it seems like those inventory dynamics are impacting multiple segments.
Interesting. So it sounds like their compute and networking business, fueled by HBM, is really the standout performer, partially offsetting weakness in their other segments, which are facing headwinds from customer inventory adjustments and, of course, those NAND pricing challenges.
Exactly. And, that HBM story is really worth digging into a bit further. We keep hearing about it as a major growth driver, and Micron is clearly positioning themselves as a leader in that space.
Definitely. Let's unpack that HBM dominance a bit more. What are they highlighting in terms of their performance and market position?
Well, they're boasting some pretty impressive numbers. As we mentioned, their data center DRAM revenue reached a record high this quarter, and that HBM revenue exceeding $1 billion is a major milestone. That 50% sequential growth in HBM is nothing to sneeze at either.
Right, that's serious momentum. Are they giving any indication of how they're doing relative to their competitors in the HBM space?
They're making it very clear that they're ahead of the curve. Not only are they reporting strong demand, but they also highlighted that they're shipping HBM ahead of their own internal schedule, which suggests they're executing really well.
That's a good sign. Sounds like they're really firing on all cylinders. Any other interesting tidbits from their HBM discussion?
Yeah, they specifically emphasized that they are the only company currently shipping low-power DRAM into data centers at high volumes.
Now, that's a noteworthy point. With the ever-increasing energy consumption of data centers, that low-power capability could give them a significant edge.
Absolutely. And they're not just resting on their laurels. They're already looking ahead to further growth in HBM and data center DRAM. They're projecting another record revenue quarter in Q3, driven by increased shipments of both DRAM and NAND.
So they're expecting the good times to keep rolling, at least in the near term. Did they provide any insights into what's driving that continued growth?
They specifically called out strong demand from AI data centers as a key factor. They also mentioned that the ongoing ramp-up of their HBM production is contributing to a tightening supply situation for leading-edge DRAM, which could further benefit them.
So basically, riding the AI wave and potentially benefiting from a supply-demand imbalance in their favor. Sounds like a good position to be in. Now, apart from just the market dynamics, are they doing anything at the technology front to bolster their HBM leadership?
Oh, absolutely. They're not shy about touting their technology advancements. They're positioning their 1-beta DRAM technology as the industry leader, and they're already a step ahead with their next-generation 1-gamma node, which utilizes EUV lithography.
EUV, that's the cutting-edge stuff, right? What kind of improvements are they claiming with this 1-gamma technology?
They're throwing out some impressive figures. They're saying it offers a 20% reduction in power consumption, a 15% boost in performance, and over a 30% increase in bit density compared to their 1-beta DRAM.
Wow, that's a significant leap forward. Are they actually shipping any products based on this new technology yet?
Yep, they just started shipping their first 1-gamma-based products last month, specifically their D-PHY modules, which are used in data centers.
Okay, so they're not just talking about it, they're putting it into action. That's reassuring to see. What about their NAND flash technology? Any noteworthy advancements there?
They highlighted their Gen 9 NAND technology, claiming it's the fastest TLC-based NAND available in the industry. They seem to be managing the production ramp-up of this new technology pretty carefully, keeping a close eye on market demand.
Makes sense. They don't want to flood the market and exacerbate those pricing pressures you talked about. So with all this talk about AI driving demand, are they making any specific investments to capitalize on this trend?
Oh yeah, they're definitely putting their money where their mouth is. Their current focus is on expanding their HBM production capacity within their existing facilities. They're planning to continue these investments through 2026.
Okay, so near-term capacity expansion. What about longer-term plans?
They're thinking big. They broke ground on a brand new advanced packaging facility in Singapore back in January. This facility will be dedicated to HBM and is expected to significantly boost their production capacity starting in 2027.
A dedicated HBM facility that shows serious commitment. Any other major investments in the pipeline?
They also provided an update on their new DRAM fabrication plant in Idaho. Construction is proceeding as planned, and they're expecting meaningful output from that facility to begin in fiscal year 2027 as well.
All right, so strategically positioned for long-term growth with those targeted investments. Now, shifting gears a bit, let's talk about their broader market outlook and the financial guidance they provided. What are they seeing in terms of demand trends from their customers?
They emphasize that their hyperscale customers, the big cloud providers, have reaffirmed their plans for strong year-over-year growth in capital expenditures for 2025. That's a positive sign for continued data center demand.
Definitely. Any specific projections for server demand?
Yeah, they're projecting mid-single-digit percentage growth in overall server unit shipments for the year, including both traditional and AI servers. So continued growth, but not explosive.
Makes sense. And they raised their projections for the total HBM market size for the year, right?
Yep, they've bumped up their estimated total addressable market, or TAM, for HBM in 2025 to over $35 billion. That's a pretty significant increase.
So they're seeing a bigger pie to grab a slice of. What about their own market share within that growing HBM market?
They're aiming high. They stated that they're on track to achieve an HBM market share that's comparable to their overall share of the DRAM supply market by the end of this year.
That's ambitious, but given their execution and technology leadership, it's not entirely out of reach. Did they give any indication of how their current HBM production capacity is stacking up against demand?
Here's a pretty telling data point. They announced that they're completely sold out of their planned HBM production for the remainder of 2025.
Wow, sold out. That's a pretty strong signal of the current demand strength. Are they already talking about 2026?
Oh yeah, they mentioned that discussions with customers regarding their HBM demand for 2026 are already underway.
That's smart planning. So clearly HBM is front and center for them. What specific HBM products are they focusing on?
They're pushing their HBM3E product pretty hard, emphasizing its power efficiency advantages over competing solutions. They've started volume production of the HBM3E in a 12-high stack configuration, which they expect will be their main HBM product in the second half of the year.
What about their older HBM3E 8-high product? Are they still selling that?
Yep, it seems so. They mentioned that the 8-high version is designed into NVIDIA's GB200 graphics processing unit, while the 12-high version is in the next generation GB300.
So they've got both generations covered. Any other notable customer wins for HBM?
They also started shipping their HBM3E to a third major customer during Q2. They didn't name the customer, but it sounds like a significant deal.
And with all this HBM momentum, what kind of revenue are they expecting to generate from it this year?
They're projecting multi-billion dollars in revenue from HBM products in fiscal year 2025, so clearly a major contributor to their top line.
Multi-billion, huh? That's not bad at all. And looking even further ahead, what about their next generation HBM technology?
They gave a little sneak peek into their HBM4 product, which is slated to start volume production in 2026. They're claiming it will offer a more than 60% bandwidth increase compared to the current HBM3E.
60%? Wow, that's a substantial performance jump. It looks like they're really pushing the envelope.
They definitely are. And it's not just HBM that they're pinning their hopes on for the data center market.
Oh. What else are they expecting to drive growth in that segment?
They anticipate generating multi-billion dollars in revenue from their high-capacity D5 modules and their low-power memory products, specifically targeted at data center applications in fiscal year 2025.
Okay, so a multi-pronged approach to the data center market. What about their expectations for NAND flash memory in data centers?
They mentioned a goal of increasing their market share in the data center NAND flash market throughout 2025. So it sounds like they're not giving up on NAND, despite the current challenges.
Makes sense. Data centers are a huge growth opportunity, and they don't want to miss out. All right, let's shift gears and talk about their outlook for the PC and smartphone markets.
For the PC market, they're projecting mid-single-digit percentage growth in unit shipments for 2025, with most of that growth weighted toward the second half of the year.
What are they seeing as the main drivers for that growth?
They mentioned two key factors: the upcoming end of life for Microsoft's Windows 10 operating system, which could spur some PC upgrades, and the rising demand for new AI-enabled PCs, which tend to require more DRAM.
Interesting. So a combination of replacement cycles and new use cases driving PC demand. What about smartphones?
For smartphones, they're expecting low single-digit percentage growth in overall unit volumes for 2025. Not exactly booming growth, but they do see a trend that could benefit them.
What's that?
The increasing integration of AI capabilities in smartphones is driving up demand for mobile DRAM, particularly in those high-end flagship models that are packing 12 gigabytes of DRAM or more.
Makes sense. AI is everywhere these days. Any thoughts on the automotive market?
They're continuing to see a steady increase in the amount of memory and storage used per vehicle, driven by the growing adoption of advanced AI-powered systems in cars.
Okay, so basically the AI megatrend is benefiting them across multiple markets. It's fascinating to see how this is playing out. What about the broader view of the supply and demand balance within the memory industry?
They're forecasting that overall bit demand growth for DRAM in 2025 will be in the mid to high teens percentage range, while for NAND flash memory, they expect bit demand growth to be in the low double-digit percentage range.
Right, so healthy growth overall, but they're not expecting to fully capture that growth, right?
Exactly. They stated that their own supply growth for both DRAM and NAND in 2025 will be lower than the overall industry demand growth.
So they're deliberately keeping their supply growth in check. Why is that?
They're aiming to reduce their inventory levels and potentially capitalize on a tightening supply-demand balance.
Makes sense. It's all about finding that sweet spot between meeting demand and maintaining favorable pricing. All right, let's wrap things up with their specific financial guidance for the coming quarter and the full fiscal year. What are they expecting in terms of revenue and margins?
For Q3, they're guiding for revenue of $8.8 billion, plus or minus $200 million. They're also projecting a gross margin of 36.5%, plus or minus 100 basis points.
Okay, so a decent revenue bump, but still some margin pressure. What about operating expenses and EPS?
Operating expenses are projected to be around $1.13 billion, plus or minus $15 million, and they're guiding for non-GAAP diluted EPS of $1.57, plus or minus 10 cents.
So earnings should be relatively flat compared to Q2. Did they mention anything about the sequential decline in gross margin?
Yeah, they actually expect their gross margin in Q3 to be lower than what they achieved in Q2.
What's driving that continued decline?
They attributed it to two main factors: a higher volume of sales in more consumer-oriented product categories, which tend to have thinner margins, and some underutilization within their NAND flash manufacturing facilities.
So a combination of product mix and some operational inefficiencies weighing on their margins. What about their outlook for operating expenses for the full fiscal year?
They're projecting that operating expenses will increase by over 10% for the full year, driven by ongoing investments in their high-value product lines like HBM.
So investing for growth, even if it means some short-term pressure on profitability, what about their capital expenditure plans?
They're sticking with their previous estimate of approximately $14 billion in capital expenditures for fiscal year 2025. And as we discussed, the primary focus of these investments is expanding HBM capacity, constructing new facilities, and investing in back-end manufacturing and R&D.
Okay, so they're staying the course with their investment plans. What about their margin outlook for the rest of the year?
They did offer a little glimmer of hope on the margin front. They mentioned that they expect gross profit margins in Q4 to be somewhat higher than what they're projecting for Q3.
That's encouraging. Any insights into what might drive that improvement?
They didn't go into specifics, but it's possible that some of those near-term headwinds, like the NAND pricing pressure and the underutilization in their NAND fabs, could start to ease in the later part of the year.
We'll have to wait and see how that plays out. Did they provide any commentary on their efforts to manage their production costs?
Yeah, they said they expect their overall DRAM production costs to remain relatively flat year over year, which is good news. For NAND flash memory, they're targeting low double-digit percentage reductions in production costs.
All right, so continuing to focus on cost optimization, especially on the NAND side where they're facing those pricing headwinds. Are they taking any specific actions to address the NAND situation beyond cost reductions?
Yeah, they're actively managing their NAND wafer output, which is currently down by a mid-teens percentage compared to previous levels. They also have plans to repurpose some of their underutilized NAND manufacturing equipment for the production of their leading-edge technology nodes.
So basically, trying to get more efficient with their NAND production and focusing on the higher value products, that seems like a sensible strategy.
Definitely. And that repurposing of equipment is expected to result in a structural reduction of over 10% in their overall NAND wafer production capacity by the end of fiscal year 2025.
Okay, so pretty significant capacity reduction. It looks like they're really taking steps to address the oversupply situation in NAND.
Exactly. It's clear that they're facing some near-term challenges, particularly with the NAND market and the costs associated with ramping up new technologies and expanding production capacity. However, they're also very well positioned in key growth areas, most notably in the high bandwidth memory market driven by AI.
I agree. Despite the negative stock reaction, this earnings call paints a picture of a company that's making strategic investments and is focused on long-term demand drivers.
Right. And that dip in the stock price likely reflects investor concerns about the sequential declines in revenue and gross margin, especially stemming from the NAND market. But the strong outlook for their HBM business and the long-term growth tied to AI are certainly compelling.
For sure. It'll be interesting to see how they navigate these near-term headwinds while continuing to capitalize on those exciting growth opportunities.
Absolutely. And speaking of navigating, it's time for our signature This Is Not Financial Advice segment. Ready to hear a wild but plausible trade idea inspired by this Micron deep dive?
Always up for some creative thinking. Hit me with it.
All right, imagine you're a hedge fund analyst pitching this to your investment committee. What's an out-of-the-box trade idea that emerges from this Micron earnings call?
Okay, here's one for you. We've just gone through the ins and outs of Micron's report, and it seems like the market's a bit fixated on those near-term margin concerns. But what if we take a step back and consider the bigger picture, the underlying forces at play? Micron is practically sold out of their high bandwidth memory for the year, and the total addressable market for HBM is exploding because of the insatiable demand from AI models. Now, instead of directly betting on Micron, which has some short-term complexities to work through, what if we consider a long position in the companies that are essential to making this HBM revolution happen? Specifically, the manufacturers of advanced semiconductor packaging equipment.
Interesting angle. So not Micron itself, but the companies that provide the crucial tools for HBM production. I like it. Keep going.
Think about it. Every single HBM chip Micron produces, and every one produced by their competitors, needs to go through these sophisticated packaging processes. As the demand for HBM skyrockets, the bottleneck isn't just in producing the memory chips themselves, it's also in having enough advanced packaging capacity to handle the volume. These equipment suppliers are the unsung heroes, the picks and shovels of this AI-driven memory gold rush.
I see your point. While Micron grapples with NAND headwinds and rampant costs, these equipment companies are directly benefiting from the urgent need to scale up HBM production.
Exactly. It's a more leveraged play on the fundamental infrastructure that underpins the entire AI ecosystem, not just the performance of a single memory producer. You're betting on the foundation of the AI revolution's memory needs.
It's a bold idea, but it makes a lot of sense, focusing on the critical infrastructure providers as a potentially more direct and leveraged way that played the booming demand for HBM.
Precisely. And of course, I have to add the obligatory disclaimer here. This is purely a hypothetical trade idea for discussion purposes only and should not be taken as a recommendation to buy or selling any specific securities.
Absolutely. Always do your own thorough research and consult with a qualified financial advisor before making any investment decisions.
Couldn't agree more.
All right, that wraps up our deep dive into the Micron Technology Q2 2025 earnings call. We covered their key financial results, the crucial role of their HBM technology, the dynamics across various end markets, and their outlook for the coming quarters.
We dissected the good, the bad, and the potentially very profitable, at least for those who know where to look.
Exactly. We hope this in-depth discussion provided you with a clearer understanding of the factors at play for Micron and the broader memory market.
It's a dynamic space with a lot of moving parts, but hopefully we helped you make sense of it all.
Absolutely. Thanks for joining us on Talk Tickers. We'll catch you next time for another deep dive into the world of earnings.
Until then, happy investing, everyone.
And remember, knowledge is power, especially when it comes to the market.
Cheers to that.